The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern time. We got about 24 minutes to go until the start of trading, and we got markets, man, picking up basically right where we left off yesterday. You talk about an acceleration, folks. We are 100 points above where we were at the lows of Tuesday. You're talking about 3980 to 4080 this morning. We're up by 0.6% in the S&P, up by 24 points this morning. NASDAQ 100, we're up by 78. You look at the run that we've had since Tuesday. How about 400 plus points in the NASDAQ 100? You're trading above 13,000 this morning, up by 0.6%, right in line with the S&Ps. Dow up by 0.6% right now. Pretty interesting, right? Russell up by 0.7%. You got some parity here across the board on the indices. Bitcoin, how about the spike last night to 29,000 and change this morning? We're at 28,645. Crude continuing to hang at the highs that we had this week. 74.37 yesterday. We're just under $74 in the price of crude this week at 73.74. You jump over to gold. A little bit of a spike this morning, but all things considered, the context of the volatility we've had in gold recently, pretty tame morning so far. We're trading up $2 on the session at 19.86, and the price of gold. Silver's up 41 pennies. Look at the run silver had last night to $24 and change. We're just under that number at 23.89, the price of silver. And we jump to notes and bonds, and it continues with lower price and higher yield. Very interesting, the moves that we're getting in notes and bonds, and then you put it in context of the moves we're getting in the markets, man. No matter what way these things move, market goes up. Not so sure that's going to be the situation going forward. You check out the 10-year, you put it back on a daily. Quite a reversal from 117 and change about 6 days ago. We've trailed off a bit. You're right back to where we were basically on March 13th. And yeah, quite a far cry from where we were on March 9th, though, to say the least. You got the 30-year, negative by 7 ticks at 129.19 this morning. We jump over to the volatility index. You talk about a VIX, man. We might get an 18 handle right now in the VIX. 1905 as volatility drops out of this market, man. And boy, it's going to be an interesting, folks. We're coming into, obviously, tomorrow, the final trading day of March. Monday kicks off the month of April. We got a short week next week, closed on Friday for Good Friday, coming into Easter weekend. So we got 4 trading days next week. Is that right? Yeah, I think it is. So when do we get? I better check that. But I'm pretty sure that's the case. Markets closed on Friday. Is that correct? Maybe it is. Let me pull it up. I better make sure, because we got non-farm payrolls coming down the line, and then we got CPI the following week after that. And all the talk is whether the market is getting ahead of itself for Fed cuts. And we will see. The one thing I'll say, folks, is you take a look at this chart, right? This morning, this is a daily chart. You check out, this is a chart of the S&P futures. You go back to the spike high. Let's get this exactly on the spike high we got. There we go. So you're just climbing above the 618. Now, that's the spike high. Okay, and realistically, I like ballparking these a little bit better. You get an area that this thing tops out at. You get an area that it gets to the bottom of. And you can see we're kind of breaking. We're kind of breaking right now above that 618. Now, that correlates to the high we had from March 6th. It correlates to the high we had from March 22nd. March 26th, 4,082. Put it on your chart, folks. We're right there. We just hit a high of 4,085, right? You're back to March 6th, 4,082. Well, geez, it was a quick trip down, 250 points in the S&Ps in the span of 4 days? Now, that was the banking crisis developing. That was Chairman Powell as well. Powell spoke in front of Congress March 7th. Banks started imploding March 9th. The 10th was Friday. It was quite an escalation, but we've gotten it all back. I mean, think about that on a fundamental perspective, right? Chairman Powell comes in front of Congress. He says, man, inflation's out of control. We got to go higher than we thought, probably going to be higher for longer than we thought. Market says, man, that's not good, right? Interest rates are going to be going up higher than we anticipated. Equities are going to pull back. 2 days later, we find out, guess what? All these interest rate hikes, they're causing some real pressure, man, in the banking industry. And that's going to make things even more difficult. Market says, well, banks are collapsing. That's not good. We trade lower. And guess what, folks? In the span of 2 weeks, we get it all back and then some. We are actually above. We are above where we were coming into Chairman Powell's speech. Absolutely remarkable, the resurgence in this market. We'll see if it holds. Today's another day, to say the least. And we will see if it holds. VIX at 19, man, not that bad. If you're making trades in this market right now, when you got a volatility index trading under 20, if you're looking for big moves, you're not going to have to pay the premium sometimes if you get them. Doesn't mean you're going to get them, though, folks. To say the least. All right. You talk about a strong economy, man. Another week of unemployment claims under 200,000. And this is what really confounds my brain in terms of how none of the data lines up with inflation pausing. And we'll talk to our man Kevin Hincks after the break. He made some great points yesterday saying, listen, if we're going to cut, there's going to be an event. Maybe it's something like the banking crisis, et cetera. But it's coming down the line. And it will be interesting. On a side note, look at all the ads that I'm getting on just random internet sites. This is a real deal, folks, okay? Interest rates, right? How much interest is your broker paying you? This is what's going on. We are at a point in time where it makes sense to make sure you're getting a yield on your money. So I found this one interesting, but you know which one I found more interesting? Now, these are just random articles, okay? We're going to get to these articles, but pay attention to the ads. Check out this ad, okay? This is on a journal article. Protect deposits with access up to $50 million in FDIC insurance. Would you ever imagine seeing an ad like that 3 weeks ago? Never, right? You'd say, who needs to protect their assets up to $50 million? What are you talking about? Yeah. It's a game changer, what's going on right now, folks, in a big way. And let me find the article. Come on. Is that one? That one? Oh, maybe it's on the journals. Where did I get you? Here we go. Not surprising, folks, that small banks are losing to big banks. Their customers are about to feel it. Banks too big to fail are gaining deposits. How can I compete for new business with that big enchilada out there? I agree. I don't know how it happens in terms of how you do it, folks. Take a look at these charts. We'll kick it off. Deposits change from a week earlier. Small banks, $100+ billion taken out of small banks. That's a change from a week earlier. Where'd they all go? To the big banks. Now, here's the kicker. Look at the big banks leading up to this, coming into this year. $100 billion in the beginning of the year, almost $100 billion a couple weeks later, almost $75 billion, probably $80 billion a couple weeks later, $60 billion a couple after that, and then we come into March, and you get 60 billion withdrawals, and then finally you get some added benefit of deposits coming all from the small banks. Panic has subsided, but the deposit swings could have long-lasting repercussions for the communities served by smaller banks. I would agree, folks. I don't know who is putting their money right now above $250,000 in a bank that is not a systematic, automatic risk in terms of the large banks out there that we just cannot, without a doubt, let fail. I wouldn't be trusting the government, folks, to say, it's an implicit guarantee. Why would you ever risk that money for basically no return? And this is not going to stem. It's not going to stop. Not even close. Deposits by bank size, right? You look at where this is going from 2000. Yeah, not surprisingly, they've ratcheted up the big banks. But look at the small banks, man. Small banks have reached $5.5 trillion. Now, what's going to happen is, okay, this number on the small bank, it just makes life more difficult. They lose deposits. What do they have to do? They have to give that money back to customers. They have to possibly sell something off of their balance sheet. And we know their balance sheets could be in trouble with all those hold-to-maturity securities. Stay tuned, folks. We're coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up by 26 points, almost right near the session highs, up about 0.6%. To talk about the markets, folks, let's jump over to our man Kevin Hincks. Every trading day, 12 noon Eastern time, right here on Tiger TV, folks, the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White, the whole team. They got some great guests, folks. They walk you through hypothetical trade setups so you can learn exactly how to set up trades, manage trades, the whole deal, and quite a market we have. Kevin Hincks. Positive markets yet again this morning. Good morning.
Good morning, Tommy O'Brien. Yep, economic data this morning did nothing really to knock this market off its path, Tommy. And until we get income and outlays tomorrow morning, some inflation data that, you know, the consensus right now, Tommy, is for that year-over-year core to come in at 4.7%. That would be flat to a month ago. So we'll see based on expectations what that is. But right now, Tommy, you're right. The overall banking problem is calming down. You've got a VIX right near 19. You've got a 10-year near just below 3.6. You've got a dollar now below 102. But the other side of that, Tommy, is you've got crude oil rallying now. It's up a full, $10 off where it was, almost $10, 73.65 right now, almost $10 off its lows. But that being said, the market is drifting upward, Tommy, and there's not much to get in the way as we come to the end of the quarter.
It's pretty interesting, man. I've talked to you about the possible bear influences in this market, just in terms of, we had the discussion yesterday. I agreed with a lot of what you were saying in terms of the possibility maybe of the Fed potentially cutting. Is that likely? Doesn't mean the market has to go down, though, man. When you look at areas, Kevin, I got a chart of the S&P futures up, the ES contract up here on the Thinkorswim platform, and just putting it on a daily basis. I mean, we got the highs from earlier this year. We approached 42.08 on February 2nd. On a technical level, Kevin, do you see any area that we face possible resistance? It's pretty remarkable, the run we've had from March 13th of 38.39 I have on my chart. We're approaching 250 points now to the upside. We actually just got briefly above the high we had on March 6th, which was 4,082. So we're kind of right at that high. Is there an area that you're looking maybe for some resistance? This market just remarkably impressive in terms of how it just keeps going up on a daily basis, and I'm trying to spot some areas on this chart. 4,200 in my opinion, maybe that's the next area we face a little headwind as we go forward here.
Yeah, Tommy, I understand the significance of technical analysis and looking at those levels, but me as a fundamental trader, I look at the data, the flow of data and how that affects the overall market and the news flow. I think levels are important in a way, but they're one tool. And, frankly, if really good news comes out and we bump up against a significant level, I think the news would trump any level that we're at, Tommy. And I watched, like this morning, I'm watching the fact that yields and look at the U.S. dollar this morning. That's what I think is fueling this market this morning on the upside. The dollar, remember, Tommy, think about it like this. Right now, you can make a case that the dollar on the downside here is justified because we're at the end of our hiking cycle, and Europe and foreign governments are still in the middle of theirs. Therefore, you could see pressure on the U.S. dollar that favors stocks, right? That's what affects my trading, not necessarily any level on the downside or upside. I look at them, and I notice where two-way order flow would be induced into the market, but I'm looking at these fundamentals, Tommy, and how they affect trading in general.
It's so cool how many fundamentals we're going to be getting, and I couldn't agree more, man. I put them both on my chart, and everybody, I think, has their mix of what they're comfortable with, whether it's technicals, whether it's fundamentals, and I definitely like a mix of both because, boy, in this market, Kevin, the fundamentals, it seems like we're going to be getting fundamental news from months on end right now, and then they're all going to be so important numbers as we come into the end of March. Tomorrow, the last day of March, and boom, we kick off April, man. We're going to get all that March data coming down the line. With that in mind, you've mentioned it before, man, we're coming towards the end of the quarter. We got 2 days left in March. We come into April. We've had some equities trickling out with some of their numbers. We've had some movers, too, on some of those numbers. What are you guys talking about on Fast Market at 12 today, Kevin?
We're at the end of the quarter, Tommy, so let's have some fun. We're going to talk spring break and travel. So we're going to trade United Airlines. We're going to trade Royal Caribbean Cruise Lines, and we're going to trade Airbnb today. So I love a good theme, Tommy, and today's theme is travel.
And look at that, man. I pulled up United, man. Woo, from $55 up to $40. And Airbnb, I'm always watching that one. An interesting case from $80 up to $140. You back off a bit from $120. What do you think of Airbnb right now, Kevin? I was actually looking at that stock myself yesterday, and I was actually just on the site yesterday, just glancing around. Hadn't been on there a while on the application on my phone. What do you think, Airbnb? I mean, you talk about volatility on this equity, a growth stock to put it lightly, and boy, the pandemic kind of changed things in both directions for them. Give us a little teaser, if you could, on Airbnb right now.
Airbnb is one of those companies, Tommy. Remember, they're asset light. They don't own anything. They don't own any of the homes. They're just a conduit between the traveler and the homeowner. Now, so I think they're doing an incredible job, and it seems, what I read, some of their biggest problems are getting more homes, getting inventory for them to rent out. So they've got challenges, but it's not the way you think. It's not demand. It's actually getting homes to rent. So, yeah, I think Airbnb is in a unique place as people choose other places to stay besides just hotel rooms. And it's where groups can stay in a house. So, yeah, Airbnb is a fascinating asset-light company that really has high margins and high growth potential, Tommy. But we're going to look. Doesn't mean that a slowing economy wouldn't affect travel and wouldn't affect, there's some things that could affect. And maybe they got ahead of themselves like a lot of stocks did during COVID. So, yeah, we're going to look at Airbnb. We're going to talk about it. We're going to trade it today.
And you make some great points, man, with the family. I got young kids in the house, man. It is kind of cool. Just, the more people you have, I find myself looking at Airbnb much more than a hotel just because it's easy, man. You got kids, you got family, you got grandparents, you put them all in the house. And, yeah, as you put it, quite a problem to have, right? If you have a demand problem, you might be in trouble. You got a supply problem, you might be able to solve that problem because demand, they got it in a big way. Kevin, as we're talking to you, the market just keeps going up. We're up 28 points at 4,085. I appreciate the time as always, Kevin. It's always been a busy morning, I feel like, this week. We don't talk to you tomorrow, man. As I always say on Thursday, it's going to be interesting to find out where we are on Tuesday when we talk to you, Kevin. I appreciate it. We'll be watching at 12 today, and we'll talk to you on Tuesday, man.
Thanks for having me on, Tommy. Have a great day.
Have a great day. Have a great weekend. Folks, tune in. You heard it. They're talking about 3 great stocks. And yeah, it's an interesting one, man, when you check it out. Airbnb, I was on that application last night, just taking a look. I wanted to see even just rates. It's always interesting to see what rates are going on in terms of just feeling the market. And that's really what I was doing last night. I was saying, I wonder what rates are, because I hadn't been on an Airbnb vacation in a while. And you feel the economy, right? You hear all the talk about it, et cetera. And yeah, rates are doing just fine, man, on Airbnb, to put it lightly. S&P's doing just fine as well, man. Up 28 points, 4,085. And yeah, as I was talking to Kevin, where's the next stop? Might be 4,200 in this market, man. It's been a one-way trip. What I can't wrap my head around just yet is how we're going to tame inflation if everybody's talking about cutting rates, folks. But we're going to get to find out in the next few months. Stay tuned. We'll be right back for the Market Open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. You put the S&Ps on a 5-minute chart. It's basically been a one-way trip for 100 points, man, from where we were at the lows of Tuesday, trading up to 4,083 from about 3,983. What did we make a low there? Yeah, pretty much. Is it to the tick? Let's zoom in. 39.80 was the low to the tick, and we're trading 103 points above that price level. Remarkable. Jumping around to some of the other headlines out here. It's remarkable how this plays out, folks. So you get the headline here on CNBC: Senate Democrats, led by Elizabeth Warren. I know she's a divisive figure to some, press federal bank regulators to implement stronger capital requirements. Why is it just Democrats on this one? This is why I lose my mind in terms of how is that the case, man? Of course they need more regulations. Do you see what's going on right now, folks? You have systematic banks that fall below the threshold that was intended to make sure that we really regulate the banks that are too large, that we don't want to let them fail because they'll have systematic problems. And really where this goes into, okay, is it goes into the 2018 rollback of the Dodd-Frank, okay? And I don't understand why this one's partisan. Now, you jump to where we are, folks. You don't have to go back far, okay? March 3rd, you got 10 Republican senators. March 3rd, this month, okay? This is how quickly things unravel, and it's a constant battle, okay? It is so easy, folks, to say regulations are bad. We need jobs, okay? This doesn't have to be political. That's the easiest thing in the world. Of course it is, because I love jobs. I love job creation. I love people making money. I love people being successful. I love a strong economy. I love growth. I hate overbearing regulations, okay? I don't want government in my life where they don't need to be, etc. But if you're sitting here on March 30th arguing that banks need less regulations, then what are you doing, man? Okay? What are you doing? This is March 3rd, okay? This is a letter written by the ranking member as well as 10 different Republican senators, okay? Specifically talking about that Vice Chairman Barr has suggested a need to increase. Let me see if I can make it bigger. There we go. Has suggested a need to increase capital requirements, which appears unfounded, as banks subject to the current regulatory capital regime seem to have weathered a real-life stress test of COVID-19. Moreover, let's do it one more time. Moreover, increasing capital requirements during an inflationary cycle may have serious consequences for lending, market liquidity, and the broader economy. Are you afraid yet of what would happen if we do that, folks? Are you? You should be, because if that happens, what's going to happen? Right? For instance, there's a significant body of economic research finding that a 1 to 2.5 percentage point increase in capital requirements has the potential to sacrifice over $100 billion in GDP annually. Are you for crushing GDP by $100 billion? I mean, you hear it, folks. It's insanity. Okay? Use your brain. Get out of the politics. This was a letter written March 3rd talking about the negative impacts that everybody will have. In 2018, the bipartisan, and it was bipartisan, okay, Democrats aren't out of the woodwork yet, but what are we doing right now, okay? What are we doing right now? What are we doing? We should be increasing the regulations on especially the banks that fall in between maybe that $50 to $250 billion range. And that's just the little that I know from everything going on, folks, okay? But read this letter. If you haven't found it, I'm going to put this in the Tiger's Den. Read it, because it couldn't be more wrong, and it's everything that is wrong with decrying regulations, even when they matter, okay? In 2018, the Bipartisan Economic Growth, Regulatory Relief, and Consumer Protection Act, this is the one, was enacted to address the overly broad and overly prescriptive implementation of the Dodd-Frank Act, also known as Dodd-Frank. As Vice Chair of Supervision, Mr. Barr should adhere to the letter and spirit of the tailoring provisions as enacted by Congress. Reports of regulators' efforts to unwind those tailoring reforms are concerning and do not comply with the law. So everybody likes to say, I hear Republicans a lot right now talking about that Chairman Powell is responsible for this, right? Where was the Fed? Why weren't they all over Silicon Valley Bank? Where were they? The Fed was getting letters from multiple, to put it lightly, Republican senators literally saying that reports that the Fed is going to unwind some of those tailored reforms are illegal. So just hear it out, man, okay? Should the Vice Chair of Supervision move forward with this holistic review, the analysis should follow the letter of the law, fully assessing the impact on economic growth, cost of credit, and the availability of critical banking products and services. I mean, I'm going to post it in there, folks. Signed by Tim Scott, the ranking member. They go down the list in terms of the U.S. senators here. You can pull it up. I'll post it in the den. It doesn't usually come back full circle just that quickly, folks, okay? But this is what we deal with constantly, okay? Regulations can be horrible, but they're necessary as well. The truth is always somewhere in between. It doesn't have to be binary, folks, okay? You should be able to look at this article and be like, what a bunch of jokers. Could they be more wrong? Maybe we should do something before the next time it happens. Regardless of where you sit on the politics, folks, this is like the simplest thing in the world. Like you're looking at blue, telling me that you're looking at red, okay? So I don't know why they're not joining the bandwagon. Everything has a cost risk reward analysis, okay? Everything. I get it. Yeah, if you curtail it, yes, there'll be a little bit less growth. But folks, I mean, how many times do we have to do this, right? 2008, the whole freaking system almost collapses. By 2018, you got Barney Frank in there, whose name's on there, okay? So it goes both sides of it, but he's not in politics anymore. And the people that get to make decisions, okay, that control this stuff right now. Who's in charge? What are they doing? Who are the politicians? And what are they saying? Because Barney Frank isn't in there. Okay, he's not a politician anymore. He's not a member of Congress. He has no power. Yeah, should he have been able to go to some of the boards of the banks that he was actually regulating himself right afterwards and get paid? No, period. End of sentence, okay? You can agree with all of that. But please, I'm going to post this in there, read it. So when you hear about this stuff, folks, get the partisan politics out of things, because it is bonkers when I read articles like this. And then less than 3 weeks later, when we have multiple banks failing, within the threshold that was specifically scaled back in 2018. Specifically. And there's a lot of easy room to say, well, Chairman Powell still had the ability to regulate any bank that he deemed necessary and systematic. And he did, okay? But these are the letters he was getting at the time. And I want you to focus on them, because it literally talks about do not comply with the law. The efforts to unwind those tailoring reforms, they tailored it by specifically increasing the value from $50 billion to $250 billion as the threshold, okay? That is one of the things that they tailored in the regulators when they passed in Congress when they passed 2018. So it's easy to say, well, why didn't Chairman Powell just clamp it down and regulate everybody? Folks, if that's the case, why didn't we just regulate everybody? Why was there need in 2018 to do that? And why right now can we not just say, man, that was wrong, okay? Man, that was wrong. And yeah, we got to make a change, period. End of sentence. And there's always balance, and I'll go through the den. I'm sure there's some great points. Jimmy, man, I love you. You got so much good information in that den, no matter what, man. I wish everybody was pushing so much reasonable information. But it's not a coincidence, folks. You got 10 Republican senators sending the line out there. March. It's not a coincidence, okay? And no matter where you are, you should be able to hold those politicians accountable, because when Chairman Powell was in front of Congress, you heard the same thing. 2 days later, Silicon Valley Bank was going under. Remarkable. Stay tuned, folks. We'll jump to some different topics when we get back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today
And try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps right now up by 24. We got the NASDAQ up by 89. And you know, we'll just jump around. I'll just save my mentality for people who have a better philosophy than some of the people with their emotions in the den. Specifically Zip. You might as well just get tossed out with the middle finger reactions, man. Have some decorum, folks, across the board, you know. And that's a bummer of it all. Because I say all that stuff and I'm having super reasonable arguments with people you might disagree with on a political basis. But folks, the problem is you get trapped into either side right now. And people can't discuss context in the middle, which I love about the den, that you can actually do a lot of the time. Okay. And that's where you need to go in society, man. You need to be able to have difficult conversations because it's way too easy to go one way or the other. And you know, just for instance, right? Regulations are bad, jobs are good. You know, you got to get into the context of things. Of course they are, folks. Of course they are. But you can't go continually at anything to that degree because there's no nuance, there's no context, which is actually everything about it in terms of how it's always the context. It's always the details, you know, that goes through things, folks. And that's what's getting lost continually right now, where I just wrote in the loudest voices on either side get all the attention, folks. But I choose to believe that whether you're a Republican or a Democrat or an independent, okay, that the loudest voices on either side don't truly represent what most people on either side and in the middle, where a lot of people line up, okay, don't truly represent where they line up in the middle. And unfortunately, the people who make the loudest sounds on either side get a lot of attention, especially this day and age, in the day of internet, in the day of, 8-second reels, etc. So have a little peace, have a little decorum. There's no reason to get out of whack, man. And respect everybody, because you don't really understand people until you respect them and can actually have a conversation with them, instead of just assigning them the worst values that you deem in anybody the moment you hear they might be a Republican or a Democrat. That's just helping nobody, and it's just not true, man. That's the bottom line. All right, let's jump back to some of the markets, man, and see what we got going on. How about Bank of Japan? I was reading this one, man, this morning. So Japan's super easy monetary policy sent a flood of domestic money overseas. Investors are bracing for what comes next. So I think it's next week that you have their new Bank of Japan governor in there. Yeah, so Kazuo Ueda. I should know this, man. I took Japanese. I should know how to pronounce that name like in 2 seconds, man. Took Japanese in high school. Very privileged to be able to take a language like Japanese in high school. I was able to fortunately spend a month over there. My summer after sophomore year, man, I think back, I felt like I was like 28 years old, so sophomore year of high school. Now I look at sophomores in high school and I think they're like 70 years old. It sounds funny, right? But Thankfully, my dad believed in me, trusted me. Go over to Japan for a month, man. Stay with the host family, experience the whole society. Absolutely amazing people, man. My host family was just so kind to me. Being so young, it was a unique experience, to put it lightly, man. I would call my dad at the end of the day. It'd be like 9 o'clock at night over there, something like that. I'd call him, and it'd be 9 o'clock in the morning. He'd be sitting there getting ready for the opening bell. I'd be getting ready for go to bed. But an absolutely unique experience. But nonetheless, so just a week before the leadership change at the Bank of Japan, investors are gearing up for a seemingly inevitable end to a decade of ultra-low interest rates. And, man, it's going to be interesting because all of this risks unraveling. All this risks unraveling under the new governor, as in what they just did. It's going to unravel everything because they're going to have to raise rates. Money is going to come back to Japan. It's going to come out of everywhere else, okay? And Japan investors are the biggest foreign holders of U.S. government bonds and own everything from Brazilian debt to European power stations to bundles of risky loans stateside. So an increase in Japan's borrowing costs threatened to amplify the swings in global bond markets. Pay attention, man, because this one's not going away either. We have a lot of trends right now who are going to that are going to be persisting, right? Inflation is still persisting. You're going to have this persisting, folks, okay? You're going to have Japan coming out of 0% interest rates for the first time in a decade plus at a time when the yield across the globe has just been extreme, where they've sought out that yield. Now what are they going to do? They're going to come back to Japan to get that yield. And what's going to happen? They're going to sell, let's just do U.S. Treasuries. They're going to sell U.S. Treasuries, U.S. bonds, to buy their own. So if they're selling U.S. bonds, what's that going to do? That's going to potentially put a hurt on the price of U.S. bond. It's just going to continue, man, and there's no other way around it. You talk about it, cumulative Japanese purchases of assets by country during the last Bank of Japan's term, governor of Bank of Japan's term. The U.S., 50 trillion yen, biggest by far. Yeah, you put it lightly, man. So keep your eye on that one, man. That's going to be a persistent one, to put it lightly. All right, what else we got pulled up there? Yeah, this one's an interesting one, folks. I'll tell you, Ivy League prices pushing $90,000 a year. The cost of tuition, room and board keeps climbing at elite U.S. colleges, with some economists warning about sticker shock. Warning about it. Where's the sticker shock already, folks? Now, I was so fortunate to be able to go to an amazing high school in Massachusetts, private high school, very expensive. That in itself, folks, my high school experience, Noble and Greeno, which is in Dedham, Massachusetts, probably changed my life more than anything in terms of I went there from middle school, so 7th grade and 8th grade, and 9th through 12th, 6 years. From the age of 12 to 18, it's a very defining age in a young person's life. By the time you're 18 and you go away to college, folks, you are a man or a woman. You are an adult, okay? So you're not building yourself the way you are from 12 to 18. Now, I say that because $90,000 a year, and then I was very fortunate to go to Villanova University outside of Pennsylvania, Philadelphia, Pennsylvania as well. Outstanding institution. But what I learned in high school versus what I learned in college, and I had an amazing time in college. I did learn a tremendous amount. The Villanova's got an outstanding business school there. Met some great friends, learned a lot, had some amazing life experiences. Joined a fraternity, was the president of my fraternity out there, Alpha Tau Omega. Got any ATO members out there in the den? Maybe we do. We never even talk about it. ATO, Alpha Tau Omega, Villanova University. It was a great time, but it didn't change me as a person like when you develop from the age of 12 to 18. Now, I say that because you're getting to the level, man, where even if you're successful and you have a child and you can afford the ability to send them to an Ivy League school, one of the best out there, man, Dartmouth. I had some great friends that went to Dartmouth up in Hanover, New Hampshire, visited the campus once myself just to visit some friends. Yale, 4%. Dartmouth and Brown, up 5%. $90K. I mean, it's pretty tough when you say either I'll send you to Dartmouth or I'll give you $360,000 straight away, and you can put that into whatever you want. I mean, I don't know. There's nothing like education, folks. But there's also nothing like $400,000 parked in your account for not doing nothing. That's quite an opportunity cost. Now, the reason why I wanted to get to this, folks, is because there is an outstanding deal in Florida. I know we have a lot of people in Florida. If you have kids in Florida, if you have grandkids in Florida, okay, we're going to take a break. I'm going to come back and talk about it because it's Florida prepaid. So I have Tommy, who's 2 years old right now. He'll be going to college in 16 years, hopefully. And you can lock in a 4-year university degree for him today for about $28,000. Remarkable when you think about the value that could represent. We'll talk a little bit more about that. We'll do a little bit of fundamental education costs when we get back, folks.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's check back in on the market, man. Sitting right where we basically kicked off, right? It's been kind of just a tame morning, man. VIX at 19 right now, and justifiably so, as we've had the S&Ps within about a 5-point range right now, 4,080 to 4,085. So jumping back to this, folks, because if you're not aware, I was explaining this to some of my friends, and I know this is how Florida prepaid works because that's what I've looked into. I have no idea in other states, but I know we got a lot of listeners and viewers in Florida. So you see articles like, 90 grand. It has to be cost effective, folks. Now, if cost doesn't mean anything and you got millions, then yeah, the value, there's nothing like an education at some of these colleges, folks. But if you're actually seeking a return for the $90,000 a year, which most people are, right? It's not just about the experience. You can get quite the experiences when you're talking about $360,000 over 4 years, man. It's nothing like education, okay? I keep wanting to stress that, man. Nothing like it. My dad's believed in that, and it's changed my life, my sister's life, forever. The way he believed in that, the way he invested in me as a child. Okay, I'll never stop being thankful for that, okay? But there are other ways to do that besides parking 90 grand at an Ivy League. And I remember my dad telling me, man, and this was in 1995, saying, listen, man, you get into Harvard and we got like no money somehow. You know, he's a businessman. You know, businesses go up and down, and we were doing well. But he wanted me to understand that if we had no money, you're not just leveraging yourself to the tune of hundreds of thousands of dollars in debt just to go to Harvard. And I, of course, at the time was like, Harvard? What if I go to Harvard? You're not going to let me go because we don't have the money. What if I just take out a loan? He understood it, folks, even back then. Now, the last part of this is Florida prepaid. I put in Tommy's birthday, okay? And you can do this monthly. You can do it in whether you're paying quarterly, or what is this paying? 55 payments, that's paying over 5 years. You can pay over the entirety of 16 years, or you can pay it one time. Just for simple math, folks, a 4-year Florida University plan is $28,000 today. The best part about this, okay, is that if they don't go to college in Florida, they can use that money elsewhere. Now, it's not going to go as far, though, because you're getting in-state tuition. University of Florida right now is only $6,000 a year, an amazing deal for University of Florida. If your kid doesn't go to college, you get a refund. Check it out, folks, because you talk about 90 grand a year right now for Ivy League. That's 28 grand a year, 28 grand total for 4 years in 16 years from now. That might be the best knowledge I've given you today. Thanks, folks. Stay tuned. Basil's up next. Have a great Thursday, folks.